Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Right, grade 12s, welcome to our grade 12 revision once more. We'll be focusing on paper 1. The topics for today would be financial statements and the notes. Now, grade 12s, the objectives for this lesson. Number 1, we are just going to be looking at the tools to prepare for examination, structure for paper 1, statement of comprehensive income, that is income statement. We'll be looking at the statement of financial position, that is balance sheet. Now, grade 12s, the tools you need to prepare for the exam. It's very important for you to have these documents, these materials ready, these tools ready before you write your final exam. To help you to study, the first one, you need to have your exam guidelines. You can get that from your educators. You need to have your Mind the Gap textbook, SIP materials, DBE Second Chance study guides. You need to have your past exam papers, the National Senior Certificate, as well as the papers for all the provinces. You need to have the live lessons, GDE portal. Now, grade 12, on your paper 1, we have the following topics for paper 1. You need to know what you're going to be writing about whenever the date arrives. Number 1, the first topic will be the income statement, which is called as the statement of comprehensive income. Number 2, you are going to be looking at the calculations of correction of the net profit after tax. We will be looking at the balance sheet, statement of financial position. We'll be looking at the cash flow statement together with its notes. Analysis and interpretation of financial statements. Those are financial indicators or ratios. Corporate governance and audit reports. Tangible assets. Now, very important, please note that the formats for financial statements as well as the notes are important. On my right-hand side there, if you can check, it says that the examiner can assess notes on financial statements. Once more, this is also important for you to note, as we have seen in the previous papers. The tangible assets are assessed in paper 1 and also assessed in paper 2. Now, paper 2 will assess calculations for depreciations, for carrying value, etc., and will also assess internal control processes on tangible assets. Grade 12s, we're now going to be looking at the format of a statement of comprehensive income. I hope you still remember, grade 12s, what you've done with your educators in your respective schools. Now, let us look at the first part of our format for the income statement. We call that as the trading section. That is your sales, less cost of sales. Remember on your sales, grade 12s, remember on your sales, you must always subtract debtors' allowances. Always subtract debtors' allowances. We call those as returns of goods by the customers, by the debtors. Remember, debtors are those customers we are selling on credit to. Now, when we say sales, less cost of sales, we get our gross profit. We call that as the trading section. Now, the second part there, we call it as the operating section. We are looking at our other operating income, They are listed there. I'm sure you can read them. Discount received, rent income, etc. We are going to be looking at almost all or some of these items as we do our activities for the lesson. Now, when I take my gross profit, I add my operating income, and then we will get our operating profit. Please remember this. We will get our operating profit. Right. Now, very important, always write your workings in order for you to earn part marks and also to earn method marks. Now, going back to the gross profit plus operating income, we just skipped some parts there, the gross income and all of that. But what is important, what we are trying to highlight is just that operating profit is very important. This is where most of the students, most of the grade 12s are messing up when it comes to the final exam. And again, workings on the answer sheet. Workings on the answer sheet. Grade 12s, I hope you are listening. Workings on the answer sheet, not on the question paper. Moving forward with our format, operating profit there. Please remember, after operating profit, we get our interest income. Now, for our interest income, you'll be given a figure or you'll have to calculate it. And then now operating profit plus interest income, you will get your profit before interest expense. And then you subtract that, and then you get your profit before tax. Now, the last three items, very, very important. The profit before tax, income tax, profit after tax. Very important. We are going to be talking about them later on. Now, remember, tax is always subtracted. Now, very important, some learners may complain saying accounting is challenging, but we do have our good part. We are going to be talking about the good part of accounting. The easy marks. Any learner who's been to a class, who's watched these videos, understand or will be able to get these easy marks. Now, on our easy marks, if you can see here, we just took a paper here and used it as an example, the final exam paper. So the method marks there, operation marks, if you can check, you get about 15 marks. Easily so. You won't have to work hard for them. You won't have to do complex calculations. You just earn those easily so. If you can check on your incomes, you get about 3 marks. On your expenses, you get about 4 to 5 method marks. If you check all of that, it gives us to 15. So we may expect the same during our final exam. I'm saying we may expect the same. There will always be those easy marks. Now, for our balance sheets, if you can check there, we're having our assets, non-current assets. There are examples of non-current assets. You can look at them for a minute. And then we're having our current assets. Examples are there. Very important, remember, for the non-current assets, fixed assets is the note that you will find in your paper 1. It's also going to be calculations you will find in your paper 2. And you will also find theory questions regarding this particular item, fixed assets or tangible assets. Current assets, we're having the 3 notes there: inventories, receivables, cash and cash equivalents. Remember, on our cash and cash equivalents, very important, fixed deposit maturing within 12 months. Grade 12s, fixed deposit maturing within 12 months. We subtract it on the financial assets, we add it on the cash and cash equivalents. Unless our bank is negative, then it may affect the other part. But for now, what we know is that fixed deposit maturing within 12 months, we add it under cash and cash equivalents. Now, we're getting our total assets, equities and liabilities. Then we have our two important notes. We are going to be addressing one of these notes as we move on. Ordinary share capital, retained income, and then moving to non-current liabilities. Remember, this is mortgage bond or mortgage loan or loan that you can only pay for more than 12 months, as stated there. Now, we're going to our current liabilities, trade and other creditors. Sometimes you'll find it on other textbooks written trade and other payables. This is note number 9. Bank overdraft, short-term loans. Now, it's important for you to note that bank overdraft must be shown on the face of the balance sheet. It must be in the face of the balance sheet. Now, how do we arrive at our total equities and liabilities? That will be our capital and reserves or shareholders' equity plus non-current liabilities plus current liabilities. Very important again, under trade and other payables, we are going to be adding subs. Sometimes it may be recorded separate. We are going to be adding shareholders for dividends. How to earn easy marks in the statement of financial position. It is shown here. The easy marks, as you can see. We're having those easy marks again on our new slide. Now, for our balance sheet, we can earn about minus or plus 13 easy marks. This was just taken from one of the final exam question papers. Now, we are looking at our financial statement. Grade 12, we are going to engage in an activity now. Now, the activity that we are going to be using, we extracted it from our November 2020 or trial 2021. Learners who wrote trial exam last year, they wrote this paper that we are about to do. Now, the instruction at the top of our question paper, remember, we are busy with our statement of comprehensive income together with its adjustments, together with its tangible assets. Now, the first part is just for tangible asset adjustments. You are provided with information from the records of Victoria Limited for the year ended 30 June 2020. The company sells and repairs two types of fridges, the ice cool and the freezer models. Now, if you're getting something like this, remember grade 12, the first thing you do, you must have your timeline. When does your year start? When does your year end? This is the first approach whenever you're dealing with financial statement, tangible assets. Now, just gonna quickly write here for everyone to see. What are we having? Our financial year end, it's specified, it says 30 June 2020. Now, if it's ending on the 30th of June, this means it began the previous year, July 1, 2019. Grade 12s, please keep this timeline safe. We will definitely need it as we proceed. Now, let's go to our instruction. It says calculate. Now, let's see, what are we calculating here? Just gonna erase this. Now, we are calculating total depreciation for the year. This is for 7 marks. Second one, we are calculating profit or loss on sale of fixed assets. Now, grade 12s, if you're calculating a depreciation, you've been taught, as from grade 10, as from grade 11, grade 12, you've been taught that there is a format we observe as we calculate this. Remember, we're having the word called SAN. Please remember this word. SAN means sold asset depreciation. The old, or you can start with the new, the old asset or the remaining, as well as the newly bought. Now, let's move forward. Now, the information given to us now, we are given the balance sheet account section for the vehicles. It is 4,220,000. For the equipment, it's given 968,000. And then we're given the opening balances. As you can see, it's 2019 as well as 2020. I've already drawn the timeline. Now, accumulated depreciation on vehicles and equipment, the figures are given. We'll come back to this. Please remember these figures. Now, let's move to our adjustments. It says, it reads as follows. Please read with me, grade 12, read with me. No entries have been made for depreciation and the disposal of fixed assets. It means when they say no entries, we are supposed to make entries. We are supposed to do calculations when necessary. First point, vehicles are depreciated at 20% per annum on a diminishing. Just going to underline this, diminishing balance method. Now, next time, I may use the word reducing. I may use the word reducing. I may use the word book value method. You need to remember, it means the same thing. Please note 20% diminishing balance method for vehicles. Now, equipment depreciated at 15% on cost price. What we need to note, we sold new equipment. We sold equipment on 31 January 2020. The details are as follows. Details for the sold asset. The cost price, 40,000, accumulated at the beginning. It says 1 July, meaning that is the beginning of the year, according to the timeline we drew earlier. Right, selling price is there, 22,500, accumulated 18,000. Now, we are going to look at our calculations now. Maybe grade 12s, you should be having a calculator next to you so that as we calculate, as I show you the calculations, you also calculate on your own. I hope you do have your gadgets there. Now, we're looking at the calculations for the vehicles, depreciation on vehicles. Remember, there was no vehicle bought. So remember, I talked about SAN. The sold, meaning I have 0 for the sold. I didn't sell any vehicle. No vehicle sold, grade 12s. And then for the new one, I also have a 0. No vehicle bought. There is no information telling me about vehicle, telling us about vehicle bought. Now, we're coming to our remaining. Remember, we're using diminishing. For diminishing, remember, it is first cost price minus accumulated, and then we're going to use our carrying value to do our calculation. Now, as you can see, cost price, 420,000. That's what we are having there. It's 420,000, as you can see. And then we are having our accumulated depreciation. Please note, grade 12s, it's not 422,000, it is 420,000. And then we subtract accumulated depreciation on vehicles. And then we will get our carrying value, and then we multiply by 20 over 100. Then we will get our depreciation, which is 579,000. This is the loss of value in all our motor vehicles. Now, moving forward, please keep the 579 safe. Keep the 579 safe. We will need it when we add all our figures. Just gonna remove everything now. Moving forward, we're now looking at our depreciation on equipment. We still use the same word. Remember, told you about son. Still stressing son, son, son. Sold, old, new. Grade 12, please remember this. Now for the depreciation for the equipment sold. Remember, if I take you back to our information, if we go back to our information there, it says that we sold equipment on the 31st. Now we're going to look at our timeline for that. We look at our timeline for that. Timeline now, it's sold on the 31st of January. Our year began on the 1st of July. Now, if we can calculate how many months here, just going to take you back there. Please, I always tell my grade 12s that when you calculate the number of months, do not calculate using your mind only. Please use your fingers. So it's going to be July, August, September, October, November, December, and then January. And then it becomes 7 months. What I've seen, where I've been teaching, I've seen that learners who do not use their hands, they sometimes get it wrong. This is 7 months. Now, we're taking the 7 months to the current slide we're dealing with. Now, let us look at our current slide. For us to do our calculation, remember the cost price is 40,000 for the sold equipment. We are using cost price method. Remember, for cost price method, we do not subtract accumulated depreciation. I hope you remember that from your grade 11. Now, it's 40,000 multiplied by 15%, which is 15 over 100, multiplied by the number of months. Remember the 7 months? Most learners, they make a mistake by only putting 7. Remember, it is 7 months out of 12 months. Right. This gives us 3,500. Moving forward, we're looking at our depreciation on old. Remember, I'm doing son, so I'm doing S and O. So I'll have 0 for the new because we did not sell. We did not buy any equipment. We only sold as well as the remaining one. Now, the trick here is 1. Please remember, please note down, you must always update your cost price before you calculate depreciation for the sold. Just gonna have it down here. Please update. You need to ensure you update the cost price. What do I mean by that? Look at this part. 968 is my starting balance for equipment. How do I update? I remove the assets already sold. I need to remove that. Why also am I removing that? Because I have already calculated the loss of value, the depreciation for it. So it should be removed, because if I don't remove, then I will be double counting. Now, 968,000 minus the cost price of the sold, which is 40,000. This 40,000, remember, grade 12s, it is not accumulated depreciation. We don't have to subtract accumulated depreciation here because we are using cost price method. Now, we multiply by 15 over 100. Now we are going to arrive at 139,200. Now, moving forward, just gonna remove this. Moving forward, now we're coming to our total depreciation. Remember, what we've been doing here, we've been trying to calculate total depreciation. By the way, total, it means I'm looking at my depreciation for my vehicles plus my depreciation for my equipment. For my total depreciation now, I'm taking my 579. Remember, this was for the vehicles. Plus 3,500, as you can see, just on the left-hand side there, plus 139,200. Then we will get the total of 721,700. Moving forward, second part of our question required us to calculate loss on sale of an asset or profit on sale of an asset. Now, still on our tangible assets, remember the information that was given earlier. Cost price of the sold is 40, accumulated selling price 18, 22,500 respectively. Now, what is important, I will be doing this. I know some of or most of you are friends with T accounts. Some of you prefer a straight line method. So we are going to be accommodating the two students. Now, the first one, remember, accumulated depreciation plus depreciation equals total accumulated depreciation or total depreciation for the sold assets. Remember the word accumulated, it means total of all depreciations from the current year and the previous years. That's what we mean by the word accumulated, something that we've been obtaining over the years. Now, moving forward here, in this case, in this activity we are busy with, our total depreciation for our equipment, remember, it will be the 18,000, which is our accumulated depreciation at the beginning, plus the 3,500 rands that we got when we were calculating depreciation earlier on. Then the total depreciation amounts to 21,500. Moving forward, we're having our carrying value on the day of sale. Carrying value on the day of sale. What do we mean by the word carrying value? Remember, if you see the word carrying value, you're thinking cost price minus accumulated. If you see the word carrying value, we think cost price minus accumulated. This is what is happening here. 40,000 is our cost price minus our total depreciation. Remember, if I say accumulated, I mean total depreciation. So it's minus the 18,000, also minus the 3,500. Then we get our carrying value on the day of sale to be 18,500. Moving forward. Now, our selling price minus carrying value will give us either a profit or a loss. We know our selling price right now. We know our carrying value right now. Let's move forward Now, our selling price is standing at 22,500 minus our carrying value, which is 18,500. This gives us 4,000 rands. This will be our final answer. Now, this 4,000 rands becomes our profit. Why is it a profit now? Because our selling price is bigger than our carrying value. Please note this. I'm just going to write it here. If the selling price is bigger than our carrying value, then we are going to be having a profit. Please remember this. If the selling price is less than our carrying value, then we will have a loss. Selling price, if it's less than our carrying value, then we are getting a loss. Selling price bigger than carrying value, a profit. Selling price smaller than our carrying value, we get a loss. Now, let me accommodate those who are using T-account. T-account is preferable because it will easily show you whether it is a profit or a loss. And I have my T-account here. Now, remember, in our T-account, this is the asset disposal T-account. For my asset disposal, remember, on the debit side, we will have our cost price of the sold, which is our 40,000. And then on my credit side, remember, grade 12s, we will have our accumulated depreciation. Remember, it is the 18,000, the starting figure, plus the 3,500, the depreciation of the sold, grade 12s. I hope you still remember this from your classes. Now, if we take 18,000 plus 3,500, then we will arrive at 21,500. Right. Now, this side will have our selling price depending on how we sell our assets. If we sold it for cash, then we'll have our bank. Remember, this is our selling price. Allow me to use SP for selling price. Now I'm having my 22,500. Right. Now, if I'm using a T account, remember what you've been taught in grade 8, grade 9. You check which side is bigger. Now, our bigger side is our credit side. 22,500 plus 21,000. This gives us 44,000. Now, I will write 44,000 on both sides. Now, grade 12, how do I get my profit or loss now? Just a few seconds, think about it. I'm sure some of you got it correct. It should be a total minus 40,000, and then we will remain with our 4,000. Now, because you have the balance, the smaller side as the debit side, this becomes a profit of 4,000. Remember, we got 4,000 on the other side. I'm sure you still remember this ledger account from grade 11. Now, let us move on. Sure, some are still coping, some are still digesting. But I've been told that asset disposal is your favorite topic. I'm sure most of you are doing great here. Let's move on. Just gonna remove this. Now, we've discussed the other part, that we have a profit. Now, how is this recorded in our statement of comprehensive income? That is our main part now. Remember, we got a profit. Profit means we are receiving something in a way. It is an income. So now, when we record it now, it will be under other operating income. So we call it as profit on sale of equipment or just profit on sale of an asset. Now we record the 4,000. This is how we record the profit on sale. Now, another question. How do we record the depreciation that we've been calculating on our statement of comprehensive income? Remember, our main purpose here is not only to do calculations. We are doing these calculations because we want to record them on our financial statements, on our notes, so that we can even analyze our information. Now, remember the 579, it was the depreciation for the vehicles. So we take that, it must be under operating expenses. The 3,500, remember, it was for the sold equipment, depreciation for the sold. The 139, remember, it was for the remaining equipment, depreciation for the remaining. And then we arrive at a total of 721,700. Remember, expenses are subtracted, incomes are added. We've discussed that on the format. Now, coming to our tangible asset note. Question is, how do we record the information we have on note number 3? Just look at this. Remember, we have two assets we are dealing with in this activity. We're dealing with our vehicles, we're dealing with our equipments. Remember our cost from the other slide, the opening balance 2019. Cost, the first cost, it is cost at the beginning. Remember, it is at the beginning, 422,000. Accumulated, it was given. If I can just go back for you to see. We're taking the information from here, the first part. It's moving from 4,220,968, 1,325,327,000. Now let's go back to our main activity. Just to show you where we got these figures. Now, cost minus accumulated. This is A. Remember, we're getting our carrying value. That is 2,895,000. Equipment, remember, 968 minus 327,000. We're getting 641,000. That is our carrying value. I know and I believe that grade 12s, accounting grade 12s, will be able to go this far. You will be able to say cost minus accumulated, you get your carrying value. Every learner who may think tangible asset note is difficult must also say that it is very, very easy to get carrying value because it is cost at the beginning minus accumulated at the beginning. So there is a light here. Right, now movements. Movements where it says additions at cost. Remember, this is what we bought. There is additions at cost. This must be recorded at a cost price. If I buy a vehicle for 200,000, I will record under additions at cost. If I buy equipment, I will record as such under additions at cost. Now, disposal at carrying value, we'll talk about it just now. I'll show you how we arrived at the 18,500. Right, let us look at that. Disposal at carrying value on the right-hand side there, it is showing that we have taken our cost. Remember, our cost of the sold is 40,000, and then we have subtracted our total accumulated depreciation. That was 21. Accumulated total depreciation for the sold. So that is the total depreciation for the sold. We talked about that. This is total depreciation. Remember, this is the cost price of the sold. So we subtract. It's very important. All examiners in almost all papers, they will definitely ask you to calculate the disposal at carrying value, which you may use it on any part of our accounting. Right. Now, moving forward, depreciation for the year, there is written by letter B there. Remember, 579. Just going to show you how we arrived at that. Now, for the 142, we'll start with the equipments. How we arrived at the 142. Remember, we've added our 139,200 plus 3,500. Then we got 142,700. Right. And then remember, this figure must be inside the bracket. When you think of depreciation, please do this. Brackets, brackets. Right. When you think of disposal in your asset note, think of brackets. You think of your accumulated, brackets. Remember, everything that I've mentioned just now, brackets. Right. Coming to 579, remember, it was just one figure, just given. We calculated it for the vehicle's depreciation. Now, moving to our last part, the last three items of our tangible asset note. Remember, you cannot try to do an activity of a tangible asset note if you have not mastered the format. The right way of doing this is for you to master the format first. Write it down over and over and over again. You study it, you pause for a minute, you write it down up until you're 100% sure you know it. Then you can now do an activity for tangible asset. You must never worry about a format as you do your accounting. You should be 110% ready for the format, if I may put it. Right. Now, last part, there is our 4,220,000. Now, how do we arrive at that? Remember, it must be our cost at the beginning plus our additions. To get the cost, maybe I should have this. There is cost at the beginning, but I will show you later on, plus additions at cost minus sold cost price. The cost price of the sold. Please don't forget this part. I will also display it. Cost at the beginning plus additions at cost amount minus the sold cost price. Remember, sold cost price does not appear in the face of your tangible asset note. I hope everyone has copied that. Cost at the end, cost at the end, cost at the end. Grade 12s, we're now moving forward. For us to get our balance sheet amount, I think for the carrying value, most of you will understand that the word carrying value means cost. For an example, there is 4,220,000 minus 1,904,000. Now, how do we arrive at 1,904,000? Remember, it must be accumulated at the beginning plus the depreciation, the total depreciation. I'm talking about the vehicles. That's how we arrived at that particular figure. Now, for the equipment, remember, we have taken accumulated at the beginning plus total depreciation minus the accumulated depreciation of the sold asset. Please remember this, the sold assets minus accumulated depreciation of the sold. Don't forget this. Now, that's how we arrived at the 448,200. Moving forward, carrying value at the end, it's cost minus accumulated. Now, what is important? Remember, we didn't do the note 3, the tangible asset notes for fun. We did it because we wanted to prepare our statement of financial position. Now, question is, which figures do we use to record in our fixed asset, non-current assets, fixed asset? The answer is, it's just on the right-hand side. We're taking the carrying value at the end for the vehicles, that is 2,316,000, plus carrying value at the end for equipment, 479,800. If there is land and buildings, we also add the carrying value, and then we get our total. This time our total stands at 2,795,800. Now, moving forward, I'm just gonna erase this. Moving forward now, our cost, as I've said, it will be demonstrated to you. 968 minus 40,000. That is our cost of the sold asset. Right, because we didn't have any purchase, no additions, so we got the 928. Accumulated, it is also shown there how we arrived at the 448. In case you didn't understand or hear what I was saying, please look at the bottom of the screen. To get the cost at the end, cost at the beginning minus sold cost price. Now, to get accumulated, that will be accumulated at the beginning plus depreciation minus our accumulated at the beginning for the sold minus depreciation for the sold. That is total accumulated. Now, we got the 448,200. Now, how do we record it in our balance sheet now? We are going to be recording the 2,795,800, the one we got in the previous slide. Moving forward, we're shifting our focus now from our assets. I think we've said a mouthful regarding the assets. Now we are going to be looking at our stock as well as our debtors control. Now, we're given these balances. Trading stock balance at the end is 1,657,500. You can see for the one for the debtors control, 2,740,000. Now, we just extracted some information in the question paper we are dealing with. Now, we are given this information. You will find this information very familiar when we do our stock valuations. We're given two models here, as stated at the beginning of the activity. iSchool, Fresor, opening stock, it's given there, purchases given, cost price given, number of units sold given, closing stock also given. Now, moving forward, our trading stock, we're having an adjustment here for our trading stock. It says there is no entry that has been made in respect of fire that occurred in a storeroom. So there was fire here in a storeroom, but we didn't make any entry. Now, a number of iSchool fridges were destroyed, and the insurance company will pay out 80%. So insurance company will give us 80% here of the cost of the fridges destroyed. Now, if the insurance company gives us 80%, it means that we're having 20% that we will not get. So 20% we will not get. That is 100% minus 80. Now, let's move on. The stock record is as follows. The expected unit on hand, that is an opening balance of 200 units, plus what we bought of 1,400 minus what was sold. So what is on hand is 300. Now, if you can check here, it's 300 minus 275. Remember 275, if I can just take you back, it is the closing stock. It is the closing stock. Now, it means that we 25 units have been destroyed. Now, how do we go about solving this transaction? This is just an overview, trying to break it down for you so that you will know what you are doing. Remember, stock on hand is 275. The cost price per unit is 3,500. And then units destroyed are 25. Cost price per unit is 3,500. Now, check how we record the loss now. Remember, we lost 25 units. Remember, this is what we lost. This is our loss. Remember, where is the 25 units coming from? It comes from the destroyed units. This is what we lost. So this is our loss in a number. We must now have our loss in an amount. Remember, how do I get a value? Remember, to get a value, I need to say units multiplied by the price. Then I will get a value. Now, remember our unit price, our cost price per unit is 3,500. Now, again, if I take you back, you will remember that we only lost 20%. Why? Because the insurance is going to give us back our 80% of the stock destroyed. So 20% is our loss. Just to move forward now, remember, why do we multiply by 20%? There is 25 units times by 3.5. The answer we get, we multiply it by 20% to get the actual loss. The actual loss now becomes 17,500. We record this under operating expenses. We will call this grade 12 as loss on fridges. Loss due to theft. We can have that also. If there was fire, it will be loss due to fire. If there were floods, it will be loss due to floods. Remember, these are extraordinary transactions. We don't see them every year in our financial statements. Now, profit on sale, we've already addressed that. Now, let's come to our inventory now. Remember, our loss, it has been recorded on the income statement. We only record the loss on the income statement. Now, coming to our balance sheet or our statement of financial position. Our current assets now, our inventory. Remember, we had an opening balance. The 5 million, it becomes our opening balance. The 1,657,500 becomes our opening balance for the inventory. Now, we will subtract now our 70,000. Now, where is this 70,000 coming from? Remember, it is the 80%. Where is the 17,500 coming from? It is our 20%. All in all, we need to recognize that stock has been lost. Stock has been lost. Now, if we move forward, it has been explained here that the 70,000 is our 80%, then 17,500 is our 20%. Now, moving forward, remember, our insurance company will only pay 80%. Our insurance company will only pay 80%. Now, it means as a company now, we expect to receive an amount. Remember, the word expect to receive means receivable. Anything receivable, it means it's what we expect. It's what we should have received or should receive. That's what we mean by the word receivable. Now, someone may ask, why are we having plus 70,000? Remember, this 70,000 is the money we expect to receive from the insurance. So it's going to be our receivables opening balance of 2,740,000 plus the 70,000. Then we get to 2,810,000. Grade 12s, please do not be ignorant. Check your zeros. Some of you, if you want to write 10,000, you end up writing 100 or 1,000, forgetting the other zero. You know what it means in real world? It means you've stolen the 9,000 rand. Please take it very serious. Check your zeros. In accounting final exam, you are going to be dealing with millions. Please check your zeros. Split your figures as shown here. Now, we're moving our focus from our trading stock, insurance claim, receivables. We are now going to our director's fees. We're now moving to our director's fees. You'll remember your theory at the beginning of the year. A director is someone who is running a company on behalf of the shareholders. Some directors can also be shareholders in a company. Please be good with your theory. Auditors, they check, verify, ensure that all internal controls are in place and all the recordings in accounting are done correctly. Right. Now, let us look at our scenario here, our information here. Now, we're having two directors here. We're having Hlophe, we're having Frey. They both earn director's fees. Now, let's look at Frey. What happened with Frey? Frey has not been paid his full fees. I hope grade 12s you are reading with me. Frey has not been paid his full fees because of rent due by him to the company. No entry has been made for the rent yet. Now, second point, remember it says no entry has been made for rent yet. So it means as accountants, as bookkeepers, as accounting people, we know that if they say no entry has been made, we don't just sit. We make an entry. Right. Number two, since the 1st of December 2019, Frey had rented part of the company property for personal use. The monthly rent stands at 13,000. I'm underlining this 13,000. It is our monthly rent. And I'm also underlining that this person has started renting as from the 1st of December. As from the 1st of December. Now, they're saying now the monthly rent of 13,000 must be offset against the director's fees owed to him. Now, we are just going to look at our workings. Now, on our trial balance, we are given a figure for director's fees, 1,279,000. Moving forward, you need to remember our year ends on the 30th of June. Now, what does this mean? What does it mean? It means that this person started on the 1st of December renting up until 30 June. Now, remember what I said to you? When you calculate the number of months, you do it physically. Do it physically. Now it's going to be the 1st of December, January, February, March, April, May, as well as June. So we are having a total of 7 months. I think the examiner loves 7. This is the lucky number. Maybe you should play you must play jackpot after this session and put number 7. Maybe you'll win. Right. Now, let us move on. Going to our next part now. I'm just going to remove this so that we'll be able to see. Our next part now, the solution now for this. How do we go about doing this? Now, for our income statement now, remember, we're having 2 scenarios here. We're having a director that we're supposed to pay director's fees. We haven't paid this person in full, but at the same time, we're having this director owing us rent, meaning we're having rent income that we're supposed to receive from this guy. Now, under operating income now, we'll have rent income. It's going to be the 13,000 per month, remember, times the 7 months. Remember, we've determined how we get the 7 months. That is 13,000 times 7. And then we arrive at a figure of 91,000. Grade 12s, it's very important for you to get your months correct because it may ruin everything. Now remember, it means that this person, they said it should be offset against the director's fees owed to him. Meaning this person is owed, if there was no rent to be paid, is owed an amount of 91,000. Now, we're taking an opening balance of director's fees of 1,279,000, and then we are going to add to observe the GAAP principles of accounting. Remember, matching principle says that if there's an expense that was supposed to be paid, we must add the amount, even if the expense is not paid. As long as it belongs to the current year, then we must include that particular amount. We're talking about matching principle. Remember, as we record, we don't just record for fun. We record using the GAAP principles. We follow IFRS and the other principles of accounting. Now, for the director's fees, we are going to arrive at a total of 1,370,000. Grade 12s, I hope you are still with me here. Moving forward. Now, very important, this entry that we just made now, the entry that we just made now will not affect the balance sheet. It won't affect the balance sheet because it is the movement between an expense and an income. The 2 entries here is our expense and income, rent income and director's fees. Now, grade 12s, I want you to read this. Just gonna give you 1 minute. You read it, you try to come up with the solution for it. Just 1 minute, 30 seconds. Grade 12s, welcome back. I hope you've tried to work through this. I know some of you are always complaining that accounting does not give enough time. Remember, accounting is all about time management. You need to ensure you manage your time well and you are accurate. Right, let us look at consumable stores. I always tell the grade 9s that when I think of the word consumables, it comes from the word whatever that I'm consuming. Now, it's anything that I'm using, my utilities. Talking about my brooms, my cleaning material, and so on. Now, let us look at this transaction now. It says an entry, I hope you are reading with me again. An entry of 28,800 was made for consumable stores, returned to a creditor on 27 June 2020. Now, the credit note from the creditor reflects an amount of 21,600. The credit note is correct, but has not been recorded yet. Consumable stores on hand at the year end were 18,000. Now, I always tell the grade 12s that whenever you're dealing with accounting, start with easy marks. Start with easy marks. What is easy now? What is totally easy in this transaction is that I do have my opening balance for my consumables. That's the easy part. Another thing that is very easy, I'm just going to be ticking what is easy here. Marks that you must never lose. I know when they say something is on hand, if I'm doing my income statement expense part, I know on hand I always subtract unless they tell me more information regarding that. But if it's just basic stationery on hand, I know I'm going to subtract that amount. Picking material on hand, I subtract that amount. Anything on hand, minus. Right. Now, the 18,000, it is so easy to get. During the final exam, when we were marking this paper, we realized that most learners were getting the 815 correct. They were getting the 18,000 correct. But the problem lied with the 7,200. Now, let us look at this one, how we arrived at this. Now, if you can check here on our 7,200, we had back to our information. The word credit notes, it means there were returns being done. These returns were supposed to be the 21,600 is the correct amount. But we recorded the wrong amount of 28,800. It means that we subtracted more. Remember, if you subtract more, if you have subtracted more, how do I correct this? I need to add the difference. Think of your footsteps. Think of your footsteps. If you've went 10 times backwards and you were supposed to have gone 8 times backwards, it means you must do what? Come at the front. Come forward 2 times to make it right, to reconcile. Now, what we are doing here, we have found the difference between the 28,800, which is our wrong amount we've recorded, minus the 21,600, which is the correct amount that was recorded on the credit note. Now, we got a difference of 7,200. Someone is asking, most of you on the exam did get the 7,200, but the problem, they subtracted it. You must remember, please remember my basic principle. If they've subtracted more, you must add the difference. If you've went many steps back and you were not supposed to, you need to go forward. Going forward means adding, going backwards means subtracting. This is why we are adding the 7,500. Grade 12s, I hope you are with me here. This is part of reconciliations. It tests your reconciliation skills. Now, our total is now standing at 805,000. Now, let us move forward. Just going to erase what you have written here. Remember, if you've subtracted more, then you need to add. If you've added more, you need to subtract. Just a basic principle. Moving forward. For our balance sheet now, this one will be under inventory. Then we are going to call it as consumables stores on hand. Please remember this, on hand. If you write consumable stores, then we say -1F. You've seen it on your scripts. Grade 12, you've seen it on your scripts. If you write an expense under balance sheet, then it's going to be -1. If you write an asset under income statement, like writing vehicles under expenses, then it becomes -1F. F for foreign. I'm sure most of you do have your memos. You can just read on the first page to know what is expected from you as you write. Remember, the 18,000 becomes our consumables on hand. Remember, if on the exam they put the word used, if they put the word used, just to quickly go through it, used stationery is 500. Remember, that will be your final answer for stationery. You won't have to subtract anything. But if they say stationery on hand, then you subtract from the trial balance opening balance. Please do not forget this. Now, let's move forward. We are now shifting our focus from our consumables. We're now looking at our cost of sales. Now looking at our cost of sales. Now, for our cost of sales here, it says the business uses the markup of 60% on cost of the fridges. Trade discount granted on the sale of fridges totaling 275,000 have been recorded. Remember, what is a trade discount? This is a cut-off price you receive as you buy. What is a settlement discount? You remember, these are not the same. Settlement discount, this is the discount you receive as you pay back what you've been owing. Now, this is a trade discount. You receive it from the sales. It's a cut off from the sales. It will decrease the sales. Now, moving forward, just going to remove this. Moving forward, our sales are given on the trial balance as 12,945,000. Now, you need to know that the money for sales, already they've subtracted the 275 for the trade discount. It has been excluded. It may not be excluded if they tell you so. But here we are told that it has been recorded, so it's excluded. If they say it has not been recorded, then we're supposed to exclude it. Now, how do we now determine the correct amount of cost of sales? Remember, cost of sales has nothing to do with our business. Our business was trade discount. We decided to give customers trade discount. Cost of sales has nothing to do with that. So we can only calculate cost of sales on original sales. What do I mean by the word original sales? It is the amount without trade discount being recognized or being recorded. Now, what we need to do here, we need to add back. We add back. Remember, we have subtracted, we have excluded or subtracted trade discount. Now we need to add back. Then we're getting the 13,220,000. These are our original sales without a trade discount. Now, moving forward, we are trying to determine our cost of sales. Now, we have our original selling price of 13,220,000. Then we are going to use our markup. Remember, what you've been told is that 60% is our profit. Cost price is always at 100%. Most learners are still getting this wrong. Please do not be a victim. And then our selling price becomes our markup plus cost price, which is 60% plus the cost price of 100. Now we're looking for 100, so it is going to be the selling price of, or the sales of 13,220,000 multiplied by 100 divided by 160. Then we get our cost of sales to be 8,262,500. Now, before we go to our next slide, remember, cost of sales, it can be reversed. If your markup is 160, then our selling price becomes 260. If markup is 160, then our selling price will mean it will be 260. Please refer to the final exam of the previous year. Right, we're now moving to our debtors, which is also looking at our bad debts. Remember, when we pronounce it, the B is always silent. Right, let us look at this one. 32,400 from the estate of an insolvent debtor was deposited in the bank account of the business. This represents 75 cents in the rent. The balance of his account must be written off. Now, when I'm writing something off, I'm thinking of bad debts. I'm thinking of debtors control being decreased. Now, these are our balances. In the balance sheet section, we have our debtors control. In our nominal account section, we have our bad debts. Now, the solution for this, remember, we use the UK method, or sometimes we call it as the Cremora. It's not inside, it's on top. So what you want on top, what you have below. Now, it's going to be the amount given to us, which is 32,400, multiplied by, we're looking for 25% to write off, divided by the 75%. Remember, 25% we must write off. And then the 75% is what we have received from the estate of this debtor. Now it's 25% over 75 multiplied by 32,400. Then we're getting a total of 206,800,000. 206,800. Right. Moving forward. You must remember the 25 over 75, this is the UK method. Very important. It is the UK method. Please note this. And then now, how do we record this on the balance sheet? We are looking at the calculation here. It is the opening balance of our debtors control. And then we subtract our bad debts that we are writing off. Now, how do we record it on the income statement? Remember, we have done that. Now, moving forward, advertising. Protea TV has contracted to produce an advertisement and to broadcast it at a fixed monthly rate for the period of 1 September 2019 to 31 August 2020. Now, the amount paid to Protea includes a once-off fee of 26,000 paid in August. Remember the once-off fee for producing the video. Please, when you read actively. How do you read actively? Underline what is important as you are reading. Now, the balance covers monthly advertising on TV for the 12 months commencing 1 September 2019. Now, balance that is extracted from our nominal account section, that is the total brought forward, 123,200. Now, moving forward, how do we go about recording here on our advertising? Now, it's 123,200 minus 16,200. Now, we will talk about the 16,200. Where is it coming from? Now, remember, on our advertising, we need to get rid of the once-off fee. It's not part of what we're supposed to be paying monthly. Now, we remove the 26,000. We remain with the 96,200. Now, 96,200, it is for 12 months. Now, we are going to divide by 12 to know how much per month. Just writing here to show you, there is 8,100. Now, let's go back and check. Remember, whenever you're dealing with this transaction, you must have your timeline ready. We paid this from September till 31 August. But we all know our year ends in June. Meaning, for the period that we paid, September to August, if you can count, September to the following August becomes 12 months. This is why we divided by 12 on the other side. Now, we were supposed to pay up until June, but we decided to pay extra months that do not belong. Remember, what doesn't belong becomes our expenses prepaid in this case. So how many months now? It will be the month of July as well as the month of August. Let's go back to that activity. Now, if we look back at this, where did they get the times 2? Remember, it is the July and the August. There is extra from our timeline. Now, we're getting the 16,200. Now, 16,200 becomes our prepaid expense. It does not belong. Remember, matching principle says that what doesn't belong to the financial year, we are going to subtract. Now, let's move forward. How do we record this in the balance sheet note number 5? Because this is where it belongs. That will be expenses prepaid, 16,200. Now, let's go to our interest and loan. Provide for interest on the mortgage loan. The statement received from Silver Bank indicates monthly repayments of 48,000. Remember, it is monthly. This includes capitalized interest. Balances given to us from the trial balance from Silver Bank. We have an opening balance of 2,300,000, closing balance of 1,984,000. Now, remember, we are doing income statement. Why do we need this information? We need it because we must determine or get our interest expense. Now, let us look at the solution on how we get our interest expense now. Remember, our opening balance will always be on the credit side because this is a liability. This is a liability. So it increases on the credit side, decreases on the debit side. We have our opening balance as 2,300,000. Still on the credit side, we'll have our interest because interest increases the balance of the loan. And then on the debit side now, we will have our installments, the bank. Now, remember, we don't deal with 1 month. Financial statements are prepared for a period of 12 months. So for our installments, we must take the monthly installment of 48,500 as shown on the transaction, then multiply by 12 months. And then we will get 582,000. Remember, most learners here made a mistake. they just took the 48,500. Remember to multiply by 12 if it's per month. If it's per year, you don't multiply, you use it as such. Right. Now, on the debit side again, we'll have our closing balance. That will be 1,984,000. Now, how do we arrive at the 266,000 that we're looking for? Remember, we are going to say opening balance minus installments minus closing balance. What I used to tell my learners is that when I'm looking for interest and then I'm giving information like this, I will say opening balance minus everything. Opening balance minus installments minus closing balance for the loan. Then we get the 266,000. You can use the bottom-up calculation also, meaning use the reversal method, 582 plus 1,984 minus 2,300,000. Now, how do we record this? Remember, interest expense comes after profit before interest expense. That will be a total of 266 as calculated on the other side. We have shown the calculation again here for those who may not have grasped it on the other side. Now, coming to our balance sheet, how do we record this in our balance sheet? Remember, under non-current liabilities, we will record the short-term loan. Remember, short-term means installments minus interest. So meaning our short term maybe in this regard was going to be 582,000 minus 266,000. So you can calculate on your own there, 582 minus 266, then we were going to get our short-term loan. And then you record it as such at the bottom under current liabilities. Maybe in our next lesson, we may talk about that. Now, our full income statement now. Sales, it was given. Cost of sales, there it is. Gross profit, it's given. It's calculated, that is sales minus cost of sales. That is 4,682,500. 8,262,500, we've already talked about that. And then operating incomes, we have service fees that was printed for you on the answer sheet. Profit on sale, remember the 4,000 we discussed earlier. Rent income, remember the 91,000 we talked about. It gives us a total of for operating incomes of 3,495,000. Now, if you say gross profit plus operating income, then we get our gross operating income, 8,177,500. Moving forward, operating expenses, salaries, audit fees, sundry operating expenses are given, printed for you. And then we're moving to depreciation. Remember our 1.1 total depreciation, 721,700. We got it from there. Directors fees, we've done a calculation for that, 1,370,000. Consumables, we've done a calculation for that also, 805,000. Loss due to fire, remember the transaction, 17,500. This is the 20%. Remember the 20%. Okay, we're just gonna take 1 minute break.
Excellent. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, Whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, grade 12. We were on loss due to fire. Remember, it was the 20%. And then bad debts. Remember, we added the 10,800 and then it becomes 206,800. And advertising, 107,000. Right, on the last part, operating profit, that was an answer coming from our expenses minus our operating income. Right, 8,177,500 minus 6,576,500. Then we got our operating profit. Then interest income, 165,000. Profit before interest expense, 1,766,000. That is the addition of the two. Then interest expense, we've calculated it, 266,000. And then now for our operating profit, for our tax, we are told that tax is 28% of the net profit. So our calculation now will be 1,080,000 times 28/100. Then we get our income tax to be 420,000. And then now we are going to be going up. We're going to say net profit after tax plus income tax, and then we will get our net profit. Or we can say 1,080,000 times by 100 all over a 72. Then we will get our net profit before tax. Now, it has been shown on the next slide, and this one is also the complete income statement. Now, in our next lesson, maybe we will talk about our retained income since we are now out of time. We'll talk about that in our next lesson. Grade 12, it's been a pleasure working with you. Thank you for watching this lesson. See you next time. Goodbye.